The time has come. As Federal Reserve Chair Jerome Powell said last week, the time has come for policy to adjust. As that thunderclap boomed and echoed across financial media. Finally, a change in direction here. It feels like over 2 years, the direction of interest rates going higher. Now we are getting the signal. So interesting development. You wonder how much gold anticipated this move. And we have seen gold continue to do well here, but we're actually down on the week. And you wonder if it's almost a buy the rumor, sell the news event. Of course, we haven't really seen a big sell-off. We're at $2,543. So not exactly a sell-off, but with that kind of news, one might have expected more of a pump. So very interesting. The gold market, I would say, one of the most unpredictable markets. It seems like it never moves at all, but then you look back over the weeks and months and you see, holy, we've gone from $1,800 to $2,500 here in less than a year. So the gold price always, to me, speaking very subjectively here, I'd call it the most enigmatic of market prices. So hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli, and it's a delight to have you here. And what a very fun show I have lined up for you. It is actually a two-parter. It is with Ken Konkin, formerly of Pretium Resources, now president and CEO of Tudor Gold, which is actually right beside, apparently, the Pretium Resources property. He's spent a lot of time in that area, and so with this two-part series, on the first part, this kind of summer special of sorts, and summer already late August here, just running away from us, but still here. We are still in August, but Labor Day right around the corner here, school about to start, the start of the media new year. So I thought I'd cap off our summer with a beautiful two-parter with Ken Konkin of Tudor Gold, telling us the story of Pretium Resources, one of the great gold discoveries of the last 20 years in Canada. It is quite a story. I didn't plan for two parts, but of course, Ken had so much to say on it. Halfway through the interview, I checked with Ken and he was okay with making it extended. So the first part of the interview, which is going to be today, is about the discovery, which is quite fascinating. I think explorers in particular will enjoy this program. Some very interesting insights. I learned a ton. In a sense, it's not the easiest show you're ever going to hear. There's a little bit of jargon in this show, but not so much where you're not going to understand what's going on here. But a fascinating story on how the deposit was discovered, particularly, as Ken said, 5 other companies had owned that property previously. So very interesting lessons there. I'd say preeminently the importance, and this came as a shock to me, the importance of sampling your drill core. If I understood Ken right, not everybody samples the drill core. They didn't think anything was there. They took a sample and found out it was something like 40 grams per ton. It was just invisible. So quite interesting. I did not realize before this interview just how much of exploration drilling results relied on what you could call visual analysis. Looking at the core. I assumed that all core would be sampled. If you're going to spend the fortune it must cost to make a drill hole, one would imagine that would all be sampled endlessly, but I imagine that's expensive too. So it was only in the sample that they discovered that there was gold there. So that is the first part. Next week, we're going to have the second part, the scandal, as I call it, and I put scandal in quotes because there was a huge story, Strathcona backing away from the project. Basically, it was so high grade, and because they had a certain kind of methodology where there'd be a cutoff at over 1 ounce per ton, and of course, Pretium had a very rich deposit, so it kind of screwed up the results. Strathcona backed away, but really the gold was there. And even more so, interestingly, but it shows that the methodology, as Ken calls it, a conservative methodology, it does show, at the end of the day, these are estimates, right? Until you dig up the earth and you dissolve everything or take samples, until you take that, there are assumptions involved here. These are methodologies of a certain kind. So it's all quite interesting how it turned out. And in that sample that Strathcona backed away from, saying at first that there was no gold, it turned out there was more gold there than estimated in that sample. So that is a story, at least, from Ken Konkin that he tells us next week. So that is next week. Fascinating. So that is why I put scandal in quotes. So first episode today, the discovery. Next episode, part 2 next week is quote unquote the scandal. Lots to look forward to there. We also have Graham Harris of Surge Battery Metals on this week's CEO Spotlight. Turning over to Victoria Gold, we do have another update. So PwC, PricewaterhouseCoopers, has taken over the project. We have a new story here, a new headline, a new update from Blair McBride at the Northern Miner. Eagle cleanup focuses now on site's water after PwC takes over Victoria. And also CBC put out a interesting report. It almost was like an essay. It's on CBC News called Troubled Water. And it goes over the story of Yukon's Eagle Gold Mine and what the mines minister is also calling a catastrophic failure. Not just Chief Donna Hope of the First Nations of Nacho Dun. So a second voice calling this a catastrophe. I think that's worth noting. And from the government. So far, Chief Donna Hope has been vindicated throughout this entire process. She has been saying this since the beginning. And here we are, over 2 months later, and now representatives of the government are also calling it a catastrophe. Very fascinating report here by Julian Green on CBC, where it goes into what the locals are saying. And basically, the locals are not liking it at all, what they're seeing. They feel that this is a serious issue and that the land is being poisoned. It is not a small issue. But I would say the good news here is everybody seems to be on the same page now. Just last week, we learned that Victoria Gold's board resigned. The president and CEO, John McConnell, was fired by PricewaterhouseCoopers. So it does seem like the rest of the cast in this drama are on the same page now. The government is urgently now trying to deal with this issue before the freeze-up. There is a sense of urgency across the board now. So really, when you step back, what we have seen is everybody else come on to Chief Donna Hope's view here that she has been saying since the beginning, interestingly. Everybody who's left in the drama, meaning the locals, or what you could call a lot of the public, at least the local public, and the government, have all come on board and are now agreeing with Chief Donna Hope's assessment. So let's quickly look at Blair McBride's story here. August 23rd, 1 week after PricewaterhouseCoopers took over Victoria Gold, the cleanup effort at its former Eagle mine is focused on groundwater monitoring, while plans are coming together for an independent investigation of the accident. And it does bring up questions as to what that will turn into. Continuing on, Aaron Dowd, the territory's mine licensing manager, told reporters in a briefing on Friday that PwC and mining environmental management services firm Parsons are installing 5 groundwater monitoring wells at the site. And here's a quote from Aaron Dowd. Quote, "One of our primary focuses is getting a better understanding of groundwater and capturing that water if necessary. We're also looking at where water storage ponds can be constructed and lining up the necessary resources to do that." End quote. The report on the remediation efforts progress comes 2 months less a day since Victoria halted operations at Eagle after a failure in its heap leach pad caused a landslide releasing millions of tons of ore and cyanide-containing solution. The Yukon government wasn't satisfied with Victoria's ability to follow cleanup directives and appointed PwC the company's receiver. Just days later, the Victoria board resigned and PwC dismissed CEO John McConnell from his position. Yukon said it didn't intend to drive the company out of business and believes mining could eventually restart at the site. Victoria and PwC haven't responded to requests for comment since the accident. Now, I would really, frankly, expect PwC to not make the same mistakes that Victoria Gold did, which I was highlighting last episode, which is to not communicate with the media or the public. I would really hope that PwC is going to talk to the media at some point here. Otherwise, you may just leave Victoria Gold in there if the plan is to not communicate. That being said, it does seem like things are happening here. But it is a little surprising that here we go again with PwC not responding to requests for comment. The reason Victoria Gold was removed from the project, I would argue, as I mentioned last episode, was a lack of communication. Perhaps also the judgment. They did seem to be downplaying what now the government is calling a catastrophe. So let's continue here. Assessing groundwater, Dowd said the 5 groundwater wells are being set up by contractor CoreGeo in locations at a safe distance from the slide, which remains unstable. Those wells are of particular importance because they'll help determine the full extent of possible groundwater contamination. Lauren Haney, Deputy Minister for Yukon's Department of Energy, Mines and Resources, said. Representatives from Parsons, the First Nation of Nacho Dun, and the Yukon government have also met to ensure proper water treatment methods are in place. Eagle sits on the traditional territory of the First Nation of Nacho Dun, which called for an inquiry into the accident and a pause to mining activities on its territory. Other ongoing remediation tasks this week and next include Pelly Construction building a protective berm and access road and exploring safe locations for additional storage of contaminated water, Dowd said. Continuing on, that work is regarded as critical over the next 80 to 90 days before temperatures drop in Yukon. The work is covered under a $50 million payment by Yukon to PwC, with the larger cleanup effort estimated to cost $100 to $150 million, according to court documents related to the receivership. Haney said the government hasn't drawn on the $104 million surety bond that it holds with Victoria for remediation, though the option is still there. Interestingly, this probe looks like it's going to happen. Terms of reference for the independent probe into the accident have been finalized and sent to the First Nation of Nacho Dun for their review and feedback, EMR Minister John Stryker said. So I would say pretty impressive, actually, that the government is saying here rather than not listening. So quite a turn here we're seeing, and an impressive one. One of the most important lessons I ever learned in my life is realizing I could change. So when I see the government going from, we're not responsible and it's all Victoria Gold and we're just waiting to hear like everybody else, and now getting involved and saying, hey, we're actually soliciting a review and feedback from the First Nation of Nacho Dun, that impresses me. And this is Minister John Stryker. Quote, the aim of the review will be to get to the heart of what happened at Victoria Gold's mine site on June 24th, to prevent it from occurring again, and to use these insights to improve our regulatory and licensing practices, end quote. Potential board members have been identified, and their names are expected to be announced next week. Stryker noted that he and other officials in the briefing were limited in what they could speak about due to a legislated appeal period in the court's receivership process. A spokesperson told the Northern Miner by email the 10-day period lasts until next week. So perhaps that's why PwC is not replying. Maybe they have good reason for it. And Stryker continues, quote, we recognize and respect the need for due diligence while this legal process unfolds, and we look forward to sharing more information with Yukoners once the appeal period has passed, end quote. So perhaps PwC is just not able to comment at this point. So it continues over at Victoria Gold, but you do feel, at least now, there is a sense that all hands are on deck and are working on the situation, as one would expect in the 21st century in Canadian mining. We are considered, leaders in mining in the world, but, the older I get, the less I believe in almost anything. To be honest, it's like the Missouri, the show me state. I'm kind of going from someone that always assumed the best on everything to, sure, I still assume the best, but I'm not expecting it. In a sense, like that is how, as I, move through the journey of life, that is where I go to. It's sort of like I assume the best, but I don't necessarily expect it. It's sort of like Ronald Reagan's famous quote, trust but verify. That's kind of where I've gotten to. I don't just assume everybody, for example, in the mining industry has learned the lessons of the, 30 years of negative documentaries that we've had. I thought everybody would be on their best behavior. My assumption was that everybody would know that there is a huge spotlight on you as a miner. We've been talking ESG at least since 2016, and I would argue maybe even like 2014. As I like to say here, we talked about ESG in the mining industry before it was cool. And I would argue it wasn't until 2020, 2021 that you started to see CNBC headlines that were saying, there are now ESG conscious investors. So The mining industry has been preaching being a good corporate citizen for years, but again, that doesn't mean that it necessarily is going to take place. That's just where we are. Again, it's kind of like you can trust but verify. Assume the best, but don't expect it, would be my version of that. Let's continue here. And I think this is actually a very apropos transition here. Here we are with deep sea mining, and now we have a new headline from Agence France Presse. Major Pacific Sea mining project eyes 2026 start. So can you guess what the project is? I'm sure you can. It is the metals company. And here is the story. A Nauru-backed company will forge ahead with contentious plans to start industrial deep sea mining in 2026. A top executive has told the AFP, vowing to overcome environmental criticisms that have dogged the project. I mean, again, and I've told this story many times on this show, but I remember interviewing Barren a couple of years ago, who is CEO of the metals company. And my impression after talking to him is this is the most environmental way of mining one could ever imagine. You know, again, akin to picking up rocks on the beach. But then I saw the video from 60 Minutes in February, and what I saw was what looked like an industrial strength vacuum cleaner vacuuming up the floor and sifting through everything and then throwing everything out in a huge plume in the water and then retaining the rocks, which frankly, you know, based on that video, looked incredibly destructive. Now, I don't want to overstate that. The extraction of resources involves, you know, getting your hands dirty. So there are arguments that can be made, even if this is the way it's being done. One wonders if there's a better way of doing it, simply just picking them up rather than vacuuming the seafloor, just picking up the nodules, as was kind of described to me in that interview. I don't know why they're not doing that, because at that point, I don't know what anybody can say about deep sea mining if it's simply picking up these nodules off the bottom of the sea. Why aren't they doing that? I assume because it's more profitable to use the vacuum cleaner. Again, I'm kind of back to this, assume the best, but don't expect it. Trust, but verify. And here we need to get more information on how they intend to do this. You know, for all of the discussion and all the articles we've read here, there is incredibly little on the actual process and the justification for using the vacuum cleaner process over the pick up the rocks off the beach process. I mean, I haven't seen actually any comparison and reasoning and justification from anybody. Let's continue this story. Canada-based The Metals Company is leading a contentious push to mine the seafloor underneath the Pacific Ocean, hovering up lumps of rock studded with coveted metals. Through a subsidiary company backed by Pacific microstate Nauru, it is hoping to open up a vast offshore economic zone where initial testing is already underway. And even just the way this is being done with this tiny country, doesn't it raise at least yellow or orange flags? Here is Metals Company Chief Executive Barren, who said on the sidelines of a key Pacific summit in Tonga late Monday, quote, "If everything went according to plan, we're still talking about 2026, end quote. Deep sea mining does not sit on the official agenda at this year's Pacific Islands Forum, but is expected to stir heated discussions behind closed doors. So it's not even on the official agenda. I wonder what they're talking about. Nauru, Tonga, and Cook Islands sit at the forefront of the emerging industry, believing it holds the key to economic prosperity in a region where land is scarce and times are tough. Pacific neighbors Palau, Fiji, and Samoa are opposed, pushing for lingering environmental questions to be cleared up before anyone takes the plunge." And it continues with a quote from Barren, quote, "We're part of the Nauru delegation," end quote. The metals company said it would lodge plans with the international regulator early next year with a view to ramping up activity in 2026. Barron said if Nauru paved the way, other Pacific nations would swiftly follow. He said Pacific opposition had been fomented by environmental activists painting an alarming picture of its risks. Quote, "What Tonga are saying is, hey, we'd like a bit more progress on our block as well. I think all of the other nations, you will probably see a change in position from them. That is my prediction," end quote. A groundbreaking scientific study published earlier this year threatens to complicate things. It showed that polymetallic nodules appear to produce oxygen through a chemical process of unclear ecological significance. Although the metals company partly funded that study, Barron said it was now disputing the findings. Quote, "We have lodged our rebuttal with that journal, and I think stand by for more information there, but we're very, very confident that the conclusions from the paper are misleading, end quote. Now, I don't find this very persuasive personally. I mean, where are the specifics? Point us to your rebuttal. We've had a rebuttal of this study we helped fund that actually went against what we were looking for, and now we don't like the results. And who is it? Is it scientists that are rebutting this? Is it the company? If the scientists aren't the determiners of what is happening there, and we saw this with Victoria Gold. Part of persuasion is created through specifics, details, right? And when people lack details, I'm kind of back to trust but verify, assume the best but don't expect it. I'm back to the show me state. Show me. So interesting development there as the metals company attempts to use Nauru to begin deep sea mining. Another headline here, this is out of The Guardian, the fight for iron sands, the bitter battle to protect New Zealand's seafloor riches. Government's push to fast-track projects in New Zealand stirs fears deep sea mining off Taranaki, long opposed by the community, could go ahead. So this is my question as a host of a mining podcast. Why are we using the industrial scale vacuum cleaner that creates the huge plume and creates who knows what kind of problem off the seafloor? Why are we using that method than the pick up the rocks off the beach method? I don't understand that. And further, if we're worried that somehow these deep sea nodules produce dark oxygen and are crucial to the ecosystem, who knows? But if that's the case, if that's the argument, how many of these nodules, like what portion of the nodules do you plan on taking? Are we going to leave certain amounts if that turns out to be true? Right? So it's becoming complicated in deep sea mining, but it continues to press ahead as this drive to secure resources is now, discussed in the top offices of power around the world. And finally, just a headline on EVs. BYD surges past Honda and Nissan sales for the first time, targets Ford with low-cost EVs. So this is electric.co, and it says here that China's leading EV maker BYD sold more vehicles than Honda and Nissan for the first time in the second quarter. It is now the world's 7th largest automaker, with low-cost EVs hitting key global markets. BYD is quickly catching up to Ford. And it's interesting because Canada has just put in a 100% tariff on EVs and also a 25% surtax on Chinese steel and aluminum imports. But I don't know if it's really going to stall BYD's growth here because the world is a much bigger place now than North America and Europe. As it says here, BYD sold 105,000 vehicles outside of China, roughly tripling from last year. Incredible. Tripling. After launching in key markets like Mexico, Brazil, Japan, Europe, Thailand, and other Southeast Asian countries, BYD is already a leading EV brand. Although global auto leaders like Volkswagen and Toyota's sales number fell in Q2, BYD continues to see more demand. Toyota is the only Japanese automaker that sold more vehicles than BYD in Q2, a stark contrast from past years, and from my understanding and recollection, Toyota is also very big on the hybrid, interestingly. So that is your big picture of stories in the wider world. And again, we have a wonderful interview with Ken Konkin, President and CEO of Tudor Gold, on the story of Pretium Resources, Part 1, The Discovery. If you want to find us online, you can find us at northernminer.com. You can find us on X at northernminer, and on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Graham Harris, Chairman and Director of Surge Battery Metals, for this week's CEO Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast for this week's CEO Spotlight, Graham Harris, Chairman and Director of Surge Battery Metals. Graham, welcome to the show.
Well, thanks for having me.
Well, it's wonderful to have you here, Graham. Lithium is such an interesting story. So as we begin here, what a few years it has been in lithium. Tell us, what are you working on with Surge Battery Metals? What are you up to?
Yes, lithium is very interesting. I've been in this space for about 10 years. This is a second or third cycle I've seen where we've had massive moves in the lithium price, and always prefer it when they're to the upside, but we're back in the bottom here. And all we can do is focus on what we can accomplish at our project. And that's what we're doing. We're working hard at our Nevada North project, de-risking it, growing the asset, and just furthering the work to get it to the bankable feasibility stage in a couple of years.
So, this is not your first time growing and exploring for lithium or growing a lithium company.
No, I was previously the founder and chairman of a company called Millennial Lithium. We took a grassroots piece of property in Salta in Argentina and developed that right through to feasibility and ended up exiting that in a successful M&A transaction with Lithium Americas for $520 million. So, yeah, we've done it before. And the beauty of this is that I was able to bring some of that team that I worked with at Millennial along to help me here at Surge Battery Metals.
Okay, excellent. And the current project, the Nevada North Lithium Project, so I assume that's in Nevada. I assume you're working in the United States. It's kind of a trend I'm seeing here where developers like Sean Rosen, Robert Friedland, US is getting popular. How is it working in the US? How are you feeling about working in the US?
Well, it's a lot easier to get to, and I'm actually quite happy to be working in the US. I mean, Nevada is the number one mining jurisdiction in North America. It's a great place to do business. It has a history of mining, so we have access to all the things we need in terms of geologists and drillers. And there's a big history of mining in Nevada. So it's very, very positive. And because of the Inflation Reduction Act, focusing on companies, sourcing domestic battery production and domestic supply of those components, it's only beneficial to be in North America at this time.
And how is the permitting journey, so to speak? Is everything, going well there?
Well, yeah, I think you said the right word there, journey. It's a journey. I mean, the beauty of we're on BLM land, Bureau of Land Management, and the beauty of Nevada is that there is a process. And as long as you follow the process and dot all the I's and cross the T's and deliver on all the milestones that they request, you will get there in the end. Is it as fast as I want? No. But there is a process. It's a clear process, a transparent process. And that is a great thing that we know that if we follow that process, we will get there in the end. So it's very beneficial.
So, as far as the project itself, where are you on this and how are you even approaching this? Do you drill for lithium? Where are we in the Nevada North Lithium Project?
In this particular instance, we do drill for lithium. We drill through a clay horizon. And we have just completed 2 years of drilling. We published a maiden resource earlier this year. We completed some more drilling this summer. We are set to update that resource in September. I'm expecting a pretty good update around mid-September. And I mean, that's based on the success we had in the drilling, extending the strike length by over a kilometer. So you can assume that, of course, we'll have a good increase in the resource. And then, of course, we're working behind that to work on a PEA. So we're doing all the engineering work alongside we finish the drilling to get to a PEA, which we hope to publish by December of 2024 this year.
How is this measuring up then, let's say, compared to your previous project, which you're saying was sold for $500 million? How are you feeling about the project, say, just in comparison?
Well, I feel great about the project. I mean, I have a lot of good people who tell me that what we're doing is the right thing and, how we're developing it is the right way. It's a different project because Argentina was a brine project, so it's hard to compare this one. But you can compare this one to Thacker Pass, which is Lithium America's flagship asset in the US. And this actually compares quite favorably, if not better, than Thacker Pass. So we do have other comparables in the US. And I think this, at the end of the day, this project will stand head and shoulders above all others.
Okay, excellent. We've seen the lithium prices you were mentioning earlier. We're in a kind of trough or it's kind of declined. Maybe it's too early in the process to try and figure out, your kind of cost basis, but how are you seeing the cost side of things as this project develops?
And that's what the PEA is all about. So that's what we're working through right now is to, define the CapEx and the OpEx. And we're using the same flow sheet that Thacker Pass is using. And I think what's going to happen is because we are such a high grade resource, I think that is going to be very beneficial in terms of the OpEx. And we will prove that in December when we can publish it. But yeah, I think you'll make a heck of a lot more money when lithium's a lot higher. But I think even at these low prices, this project will prove to be economical.
And just in terms of the supply demand, Graham, we hear all sorts of stories of oversupply. Some people will say there's not enough lithium. Where do you stand on this issue?
Well, I sort of take a long term look at it. And just like 10 years ago, when the demand was projected to be a million tons in 2025, it turned out to be 1.4 million in 2025. And along the way, a lot of companies repositioned and were able to meet that demand. But going out to 2035 and 2040, the estimates are for 4 million and 7 million tons of demand for lithium. And that's a big gap to fill between now and then. And with prices being so low, I've said before, curing low prices is low prices. Projects are being delayed. Production is not coming online. Even projects like ours are 5 to 7 years out in order to meet that demand. So where is all the supply going to magically come from in 2030 to 2035? I don't see an answer. And I fear that we're going to end up in the same boat as we did 4 years ago, where, the market will be undersupplied and the market price will take off again.
Okay, interesting. And sometimes you hear of interest from car companies or automobile manufacturers. Do you ever get inquiries into your project from, say, people outside of mining who are trying to secure lithium? Or is that not the environment right now?
Oh, no, that's definitely the environment. And I can assure you that I believe every major car company in the US knows who we are.
As we zoom out then a little bit, Graham, what is the roadmap that you see developing here? So you mentioned there's a PEA. Like, where are we in the whole process here? How do you see things looking into the next, say, 2 years?
That's a great timeline. I mean, it's the PEA. And then beyond that, what we do in Nevada is we just finished exploring under what they call a notice of intent. The next stage of exploration in Nevada for permitting is called the plan of operation. And we are applying for that currently right now. We expect to have that approved late this year. And that will allow us to further de-risk this project by allowing us to drill a lot more holes, a lot more in spacing, and turn that inferred resource into a reserve. So it's just a de-risking process in terms of more drilling and then more engineering. And then that more engineering pilot plant, that'll get us to bankable feasibility. And that's all realistic within your 2 year time frame. So I can confidently tell you that that is our goal, to have a bankable feasibility in the next 18 to 24 months.
And you mentioned the team, that some of them were brought over from your previous project. So can you tell us about the team at all?
I sure can. Very proud of that team. They're the brains behind the whole operation. Let's face it. I mean, I've got Ian Scarr, head geologist. Really key guy right now is Vijay Mehta. He's a guru of lithium processing. He's working on the flow sheet so we can get the battery grade lithium. Lithium mining is not just mining, it's also chemical engineering. And it's not only the guys that I've brought over, but underneath them, it's the access to the people that they know for us to get to where we need to be at the end, which is producing battery grade lithium.
So, what is your message then, Graham, for investors? Again, we're discussing lithium. I mean, with a 10 handle, last I checked, per kilogram there. What do you say to investors? What do you want them to know?
I want them to know that this is a long-term game. In the words of a very wise man, I think his name was Warren Buffett, he said, be greedy when others are fearful and fearful when others are greedy. And that's the case in lithium right now. Everybody's fearful. Nobody wants to touch the sector, but you have to understand that long-term EVs are not going anywhere. It's growing at 25% a year. It's not just cars, it's power tools. I see boats, planes, everything's being electrified because people want green energy and governments want green energy. So as long as you believe in the future of green energy, there is a space in that because lithium is the answer. It's the commercially adopted choice. It's lithium ion, and all the advances in battery technology since I've been in this business for 10 years are resultant from batteries using more and more lithium. And it's pretty simple. The more lithium you can stuff in that battery, the more charge it can hold and the greater the range. And that's what we're all trying to achieve, is get rid of the range anxiety out there. And fortunately, there is no other solution than lithium. And I think if people want to take that long-term approach, have a look at some of the stocks that have been beat up, down 80%. There's opportunity here. That's what I can tell people. Look for the opportunity. It's staring you right in the face.
And so if people want to learn more, they can go to surgebatterymetals.com. And are you on the venture exchange and other markets as well? Could you tell us where people can find your listings?
Sure. TSXV, symbol NILI, and also trades on the OTCQB, NILIF.
Graham Harris, Chairman and Director of Surge Battery Metals. Thank you for joining us on this week's CEO Spotlight.
Thanks, Adrian.
And a big thank you to Surge Battery Metals for sponsoring this week's episode of the Northern Miner Podcast. You can learn more about them at surgebatterymetals.com. Turning to the website, a lot of big stories here. The first is from Reuters via mining.com. U.S. inks critical minerals cooperation deal with Argentina. United States and Argentina have signed an agreement that aims to strengthen their cooperation regarding critical minerals, the U.S. State Department said on Thursday following a signing ceremony in Buenos Aires. Quote, the Memorandum of Understanding sets the direction for further collaboration in critical mineral resource sector governance, investment, and global supply chain security. End quote, it said in a statement. And we have a quote from U.S. Undersecretary of State Jose Fernandez in Bloomberg on a story that was also on mining.com on the Argentinian deal. And Jose Fernandez said, quote, it's a way for Argentina to literally make pitches to 14 countries in the EU in one fell swoop. Producing countries want the kind of investments that we're proposing, investments that will benefit communities, that will bring growth, that will observe national laws, end quote. Continuing on, BHP's return to Argentina marks new hope for untapped copper mines. This is Reuters via mining.com. A new incentive regime for mining in Argentina is attracting major players such as BHP, who are starting to eye the South American country as the world's next frontier for copper, more than a half a dozen mining industry officials told Reuters. BHP's investment last month marked the company's first foray into mining in Argentina in 2 decades. It teamed up with Canada's Lundin Mining in the $3.25 billion buyout of Filo Corporation with the aim of developing 2 copper mines along the Andes Mountains bordering Chile. The re-entry of one of the world's biggest miners has spurred hopes of other copper producers to secure better valuations for their projects so they can access finance and jumpstart projects. Copper mining has floundered for decades in Argentina's volatile economy. Finally, President Javier Milei is aiming to light a fuse with a law passed in late June promising lengthy tax breaks for investments pledged in the next 2 years. A bid to allay investors' fears and offset capital controls that some politicians dubbed instruments of torture. The incentive regime for large investments, or RIGI, also guaranteed investors access to international dispute courts rather than needing to go through slow-moving local courts. And here we have a quote from First Quantum CEO Tristan Pascal, who of course is smarting from the situation at Cobre Panama earlier this year. Quote, mining in Argentina is set for exciting growth following the country's new RIGI investment protection regime. It is great news for our Taca Taca project in Salta, end quote. So interesting developments in Argentina. Continuing on, BHP warns China recovery uneven as profit creeps higher. So China continues to dominate the narrative around the commodities markets, and this is Bloomberg News via mining.com. And here's BHP CEO Mike Henry, who said in an earnings statement, quote, in the near term, we expect volatility in global commodity markets with China experiencing an uneven recovery. He also said, quote, some sectors of the Chinese economy that drive steel demand, such as shipbuilding and the auto industries, are actually performing quite healthily. What we're seeing playing out in the market is really a fine balance between steel demand and iron ore supply, end quote. Adding, quote, we see things having bounced off the downside cushion, end quote. So Mike Henry's starting to show optimism on China. Continuing on, China's exports of critical minerals recovers after curbs imposed. This is Bloomberg News via mining.com. Chinese exports of critical minerals are returning to more normal levels, undercutting fears that the restriction imposed by the government last year could choke off supplies crucial to high-tech manufacturers around the world. Overseas sales of gallium, germanium, and graphite showed a spike in the month that preceded export controls as buyers stocked up, followed by a steep drop-off and then a recovery, according to customs figures. The data could offer a precedent for buyers of antimony, a metal widely used in munitions, which is slated for restrictions beginning next month. So, kind of a muddled picture there. I mean, you see a huge spike in buying before the export controls came into effect, and then a huge drop-off afterwards. And then you see it recovering to somewhere a little below previous exports. What's interesting is it seems to me that China can just impose this now at any point that they want, where they just go, okay, we've already put the infrastructure in place. Now we can just turn this off at any point. So it is a kind of leverage, I would argue, in matters such as Taiwan. I mean, it seems like a first step, doesn't it? saying, hey, if you really want to push us on Taiwan, we can just cut this stuff off. It appears that is what China is communicating here. We are not afraid to cut off your antimony supplies, which you need for munitions. Let's continue. Another massive headline here. Global copper surplus swells, according to a report, and this is by mining.com staff. The world's surplus of refined copper quadrupled in the first half of 2024 compared to a year ago, following a growth in production and recovery in mine output, preliminary data from the International Copper Study Group shows. According to the group's August 2024 bulletin, global mine production grew by 3.1% during the January to June period, benefiting a recovery from constrained output mainly in Chile, Indonesia, and the U.S., as well as additional production from the mine projects in the Democratic Republic of Congo. Output in Chile, the world's number one copper miner, rose by 2.4% for the period, but remains 4.5% below the average first-half production level of the last 5 years, ICSG's data shows. Indonesian output increased by 33%, recovering from operational constraints at the Grasberg and Batu Hijau mines, caused by significant rainfall and landslides in the first quarter of 2023, while U.S. output grew by 10% as production bounced back from lower levels in last year's first half. Output in the DRC grew by about 8.5%, owing to the expansion of the massive Kamoa mine, together with new and expanded capacity at other smaller miners. And finally, refined copper, the product of processing mined ores, also grew in output by 6.2% in the first half of the year. This, says ICSG, was mainly as a result of strong performances in China and the DRC due to expanded capacity. Both countries are said to account for about 53% of the world's refined copper production, according to ICSG data. So, a very interesting report on mining.com. Continuing on, copper supply risks ease as Chile miners do deals. This Bloomberg News via mining.com, and it looks here as if Lundin has solved its dispute with workers. Chile's copper mine industry is emerging from an intense period of wage negotiation, signaling a diminished risk of further disruptions in a country that accounts for a quarter of supply. And this is Bloomberg News via mining.com. Over the weekend, about 300 striking workers at a Lundin mining-operated mine went back to work. A week earlier, the main union at the giant Escondida mine run by BHP Group ratified a labor pact following a 3-day stoppage. Antofagasta reached an early wage deal with the main union at its Centinela facility, completing the firm's talks for the year. To be sure, there are several contracts still pending, including Codelco's sprawling El Teniente mine, and we have a quote from BTG Pactual analyst Cesar Perez Novoa, who said, quote, "Supply risk derived from strike action is receding as most 36-month collective labor agreements have been fulfilled," end quote. So strikes abating in Chile. Continuing on, Congo copper exports to U.S. begin via Angola Railway to Atlantic. So we've been talking about this route for months now. The Libido Atlantic Railway. And this is by staff at mining.com. The first shipment to the United States of copper from mines in the Democratic Republic of Congo has been offloaded from the Libido Atlantic Railway. A cargo of copper cathodes is headed to Baltimore after arriving by train at the port of Libido in Angola on August 19th, Trafigura Group, which is part of the consortium with a concession for the line, said in a statement. So just last week, if you'll recall, there was a derailment on this railway. So just for context, the shipment follows several previous shipments of copper to ports in Europe and the Far East since LAR took over the concession in January of this year. And scrolling down a bit, the Libido corridor is seen as a key export route from mines in Congo and Zambia for minerals critical to the energy transition, including copper and cobalt. The US and EU, under the Group of Seven's Partnership for Global Infrastructure and Investment, are supporting the project as part of efforts to counter China's dominance in the Central African copper belt. The rail line route dates from colonial days under Portuguese rule, but it was decimated during Angola's 27-year civil war following independence in 1975. Continuing on, Canadian rail lines restore service, but supply snags need to be smoothed. So there is also a strike in Canada that has been sent to binding arbitration by the government. This by Henry Lazenby at the Northern Miner. Canada's rail disruption has ended after Ottawa imposed binding arbitration, but cargo piled in loading yards could take a few weeks to sort out, officials said. Workers at Canadian National Railway returned to work on Friday after Federal Labour Minister Stephen McKinnon referred negotiations to binding arbitration, which ended a CN lockout that began midnight Wednesday. Employees at Canadian Pacific Kansas City Railway resumed work just after midnight Monday morning, although the company had wanted them at work on Sunday. The Teamsters Union told its thousands of members to delay their return. It called off a new strike at CN on Monday morning that it had circulated before the weekend. But it said on Monday it would take the Canadian Industrial Relations Board to federal court for its back-to-work order. Quote, "This decision by the CIRB sets a dangerous precedent," end quote. Paul Boucher, president of the Teamsters Canada Rail Conference, said in a statement. He continued, quote, "It signals to corporate Canada that large companies need only stop their operations for a few hours, inflict short-term economic pain, and the federal government will step in to break a union," end quote. Continuing on, lithium mining is slowly sinking Chile's Atacama salt flat, study shows. This is Reuters via mining.com. And it says Chile's Atacama salt flat is sinking at a rate of 1 to 2 centimeters per year due to lithium brine extraction, according to a study by the University of Chile. The study used satellite data collected between 2020 and 2023 to verify deformations in the Earth's crust. It was published in the IEEE Transactions on Geoscience and Remote Sensing Journal. So interesting development there. And a couple of headlines. SQM profit falls 63%, sees more weak lithium prices. That's Cecilia Jamasmy on the Northern Miner. And also Nornickel's first half profit slumps 22% on weak prices. This is Reuters via mining.com. Another headline, Dominican Republic creates state miner to explore for rare earths. This is Reuters via mining.com. And of course, the Dominican Republic, as it says here, is the home to Canadian firm Barrick Gold's Pueblo Viejo mine, the largest gold mine in Latin America and the Caribbean. And finally, Lucara finds world's second largest diamond ever mined. This is also by Cecilia Jamasmy. On the Northern Miner, Canada's Lucara Diamond has dug up a 2,492-carat diamond from its prolific Karowe mine in Botswana, the world's second largest stone ever mined by size. The epic diamond, as Lucara put it, was detected and recovered by the company's Mega Diamond Recovery X-ray transmission technology installed in 2017 to identify and preserve large, high-value stones. Its size is larger than a tennis ball and several times heavier, and is only second to the 3,106-carat Cullinan diamond. The iconic precious stone was found in neighboring South Africa in 1905 and became part of the British crown jewels once cut and polished. Incredible. And we have William Lamb, president and CEO of Lucara. Quote, "We are ecstatic about the recovery of this extraordinary diamond. This find not only showcases the remarkable potential of our Karowe mine, but also upholds our strategic investment in cutting-edge XRT technology." End quote. Fascinating. And who knows what that diamond is worth. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 3.83%, almost unchanged, down 0.01% from last week. The UK 10-year gilt is higher at 4%, that is 0.08% higher than last week. And the Italy 10-year bond is also higher, yielding 3.64%, that is 0.04% higher than last week. So interesting divergence there with US 10-year yields lower and UK and Italy 10-year yields higher. Turning to precious metals, gold is trading at $2,547 even per ounce. That is down $18 from last week. Silver is slightly higher at $29.93 per ounce. That is a penny higher than last week. Platinum is trading at $962 even per ounce. That is $7 lower than last week. And palladium is higher at $950 even per ounce. That is $17 higher than last week. So a mixed bag in precious metals. Turning to industrial metals, copper is trading at $4.21 per pound. That is 3 cents higher than last week. Iron ore is trading at $98.05 per metric ton. That is 24 cents higher than last week, so barely higher on iron ore. Aluminum is higher at $1.15 per pound. That is 5 cents higher than last week. Lead is at 96 cents per pound. That is 3 cents higher than last week. Nickel is at $7.60 per pound. That is 2 cents lower than last week. Tin is higher at $14.93 per pound. That is 43 cents higher than last week, almost at $15 on tin. Cobalt is at $11.02 per pound, 77 cents lower than last week, so cobalt continues to fall. Lithium is at $10.39 per kilogram. That is 10 cents higher than last week, but still among the lowest lithium prices we've seen here in the last 6 to 12 months. Uranium is trading at $82.40 per pound. That is $1 higher than last week, and zinc is also higher at $1.32 per pound. That is 5 cents higher than last week. Metals, a mixed bag here, following their own markets, almost perhaps surprisingly with the announcement from the Federal Reserve, but it was perhaps anticipation of that news was the rally that we saw in the preceding weeks, one imagines. And those are your metal prices. Coming up, I'm very pleased to welcome back to the show Ken Konkin, President and CEO of Tudor Gold. We discussed the story of Pretium, where Ken was working, and how one of the great gold discoveries of the last 25 years in Canada occurred. It is a fascinating story. It is part 1 of 2. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner podcast, Ken Konkin, President and CEO of Tudor Gold. But today we're going to talk about the story of Pretium Resources, a fascinating story which captured really the imagination of the editors at the Northern Miner. I was one of them, the online editor at the time, and I thought maybe John Cumming wrote his greatest editorial. Is Pretium petering out? Where I put the sun setting over, I think it was Bruce Jack there, and we had a lot of fun. Anyways, Ken, thank you and welcome to the program. Thank you for agreeing to discuss the history of Pretium.
Yeah, thanks, Adrian. Great to see you again. It's a story that I think that needs to be told because it's got so much relevance to the modern day explorer, even though the discovery wasn't so far back. It's still fresh in my mind, so I'll try and keep it to as factual as possible and keep the names that deserve credit to where their credit is due, for sure.
Okay, excellent. I appreciate that. In a sense, the goal here, Ken, is to create a historical document of sorts here from your perspective, let's say. So I appreciate that. Now, just very briefly, before we start, you're President and CEO of Tudor Gold. This is right near Pretium's properties. Tell us, how are you involved with Pretium Resources?
It's a longer history than all of that. I mean, my involvement in the triangle, the heart of the Golden Triangle, begins in the 80s. And the initial discovery I had at Treaty Creek, specifically just north of Bruce Jack Lake, was in the late 80s, 87. In fact, and they called it Konkin Gold, Konkin Silver, Konkin, whatever these showings they came up with, because that was a way of giving you a bonus for it rather than, money was so scarce. I mean, we had to go for the cheap craft dinner. We couldn't go for the good craft dinner, right? So it was austerity all the time. But the reality was all my young days geologically was in the area. So the ramp up to the discovery of all of this actually comes from Silver Standard. And beyond that, before that, with Don McLeod, with New Hawk Mining, we bought in the year 2000. What happened was there was an extinction horizon. I mean, companies were going under. Bob Quartermain did a phenomenal job of parlaying our in-ground assets with people like Ross Beatty, for example, with Manantial Espejo in Argentina. And I was actually working on that project when 2000 hit, and it was something that Bob had to do is to find money, and money was impossible. So we bought Blackhawk because it had $2 million in its treasury. Don McLeod hit the wall with low silver prices, and that was our model, pick up things with low silver. And that was a permitted silver deposit. The West Zone was the Paradrite Proustite series of ruby silver, and that was our thing. So we actually went and bought this thing because it had $2 million of cash, and the share value was liquid for Don. He got out with that. So that began the story where it begins, where our team of geologists, chief geologist was Ron Burke. He and Joe Ofsnick were in a meeting and they decided that before we deal with assets in Canada, we were going hard in Latin America. They said, well, let's see what we've got. Let's go up there and let's find out before we start selling assets. Let's start drilling our best targets. And that didn't take place till 2006. So you have to really appreciate the effort it took to get back on our feet after being almost like knocked out. So that was the beginning of the story.
Okay, excellent. So at this point then, were you a part of a company? Like, was this Silver Standard that you're talking
Absolutely.
about? Was this? It was.
Absolutely.
Okay.
Yeah,
And
I started with Silver Standard in 2091. So I was with that group for Quartermain, Ken McNaughton for 19 years. So this was but midway through my career with them.
Okay, and was this a side project basically? Like, I assume there were larger projects, or was this one of the main focuses of the company?
You know what? It was actually taking inventory of what we got. Like we've just brought on Ron Burke, who was their gold team member for I think Brazil. He was hunting with Teck for almost a decade and a half, some of the biggest deposits. So his job was to assess everything we've got and either basically go after it or sell it. So it wasn't a primary project of ours. Our primary stuff was all in Latin America and Mexico at the time. So I thought I'd done something wrong in Argentina. So they sent me up to run the program up at Snowfield's job in 2006 to see what we had. So Joe Ofsnick's perspective was, if there's anything of value, let's put some drill holes and present it as value and get some money for it. So just like dust it off and just throw it out there. So that's where we began, 2006.
Okay, excellent. So we're at 2006. So Silver Standard has this kind of extraneous property. You get sent up to kind of deal with it. Okay, then what happens?
Well, it was one of the most successful drill programs in the planet. One drill, tiny drill, biggest hole we could do was 421 meters. It stuck in my mind. We drilled probably 20 holes. We did just under 7,000 meters of drilling, and we came up with a resource. It was amazing because the upper part of Snowfields is a gold-only target, and it had, about 2-gram average. So it was outstanding what we had done with one little rig and having a tiny budget. So when we were feverishly going after Peter Reed at the time, we were spending 11 rigs on that thing. We're knocking it out of the park, but this one almost got half of the resource in gold equivalent, silver equivalent, in just one program. So I mentioned that to Bob in a coffee room saying, what are we going to do with this thing? And he was surprised. So I think in the minds of everybody, we knew that we didn't get credit for this because we're a silver company. So we're now dabbling in gold. So right away, and keep in mind, the starter of Silver Standard, it was kind of a one of three company because we had Golden Knight, which was mutual. We had Western Copper, which ironically was the Zacatecas monster that you see now, San Nicolas. That thing was called El Salvador. So we had these three companies on the wall of the entry to Silver Standard's office that we were running, but we divested from the other ones because silver was our forte. So we took that project or that idea and ran with in-ground ounces of 2 billion controlled in-ground ounces, Silver Standard, and this didn't quite fit. So this is where the thing took off, and it's like saying, well, let's drill it off. So 2007, 2008, 2009, I finally convinced Ken and everybody that we should be drilling back at Bruce Jack Lake because back in the 80s, I was there drilling on a little sliver. It's a surrounding claims of a little sliver. It's a fraction in the center called the Katir mine, the little mine that couldn't, I call it. And that was the Gold Wedge fraction. But that thing had a VOK occurrence. What I mean by VOK occurrence was I'm sitting there and doing a drill program, and the president kicks the door in at 3 o'clock in the morning. Ed Kriszkowski, Big Ed, says, look, we hit electrum, big electrum. I'm looking at him, I'm looking at his hand, I'm thinking, what the hell is this garbage in your hand? It was the crown of a bit that burnt off. It was 20 feet from a vein, couldn't get through a seam of electrum, couldn't pass, burnt the bit off, caked it, encrusted it. Night shift comes on, Don Wright, great driller, great guy, drills it out, comes up in our hand, and it was in the, hundreds of ounces, this thing. And I couldn't believe it. I thought someone tossed a bunch of gold down the hole. What in the hell is gold doing 20 meters from the target? And it's in dark green rock. It was impossible. It haunted me for almost 30 years, 40 years, until SU-12. It happened to me again. So ramping forward on the story, just giving you the teaser forward, is what happened was after 2009, we knew we were closing in on the final drilling of snowfields, but we were intrigued by all the silver anomalies that were around Bruce Jack Lake. And Ron and Ken had devised a really good program. And I credit those guys with the discovery of this thing because we did put holes into the Valley of the Kings body, just didn't recognize it. It just wasn't recognized. So this is the important part.
Okay, and just to clarify for listeners as well as myself, we have a few names here of properties here. We have Bruce Jack, we have Snowfields, we have Valley of the Kings. Are these separate? Are they different ways of kind of categorizing? Like, could you draw a picture for us of how these relate to each other?
This is simple. When you look at the whole group of claims that we had at the Sulphurettes camp, it was Snowfields to the very north, and to the south, in the middle of the claims, was Bruce Jack Lake, which off to the west of that lake shore is the West Zone mine with portal and decline all in. And then south of that was eventually the discovery of Valley of the Kings. But that's a real interesting story, how that became reality.
Okay, so you started with Bruce Jack and Snowfields then, and eventually Valley of the Kings, there was a discovery there. And these are more or less all on the same claims, as you call it.
Correct. This is the same group, a big swath of claims with this little teeny Katir in the middle of it. That's like a little island in the center, just south of, equidistant between, say, Bruce Jack Lake and Snowfields. At my experience in the 80s of having seen something like this without registering what the hell it was. Couldn't figure it out, never could explain it. It's one of those things you just say, red herring. Just happened and that's the end of it, right? You're not going to ever see it again. Wrong. This occurs in few places in the entire Stuart Trend. I'll give you the examples at the end if we have time where they also do occur. In the end, as the story was ramping up, in 2009, we were designed to do 2 drills after Snowfields to continue our drilling. From 2008, we had a great successful year. We ramped up a bunch of ounces. So now we were going to bring just 1 rig in to start testing around Bruce Jack Lake on these silver anomalies that Ken and Ron had picked out. And the big takeaway was we got there and there was such a huge snowpack that big Category 4 avalanche zippered. It took out the Mitchell Valley, the Mitchell Creek, dammed it. And our pilot said he was not going to leave his helicopter parked there because there's still stuff to come. I talked to our AvTech guy. He tried blowing it down, and the only way of dealing with it was abstinence. So we had to pull back. So now I had 2 rigs arriving, no place to put them, had a crew of 4 good guys, 5 guys to dig out. Next day, we went to Plan B. We're starting with Bruce Jack right away, now with 2 rigs. So it became like, holy geez. So now we went to Plan B, but putting these 10 holes to work immediately. So we had to pick a place that had a camp. And you have to understand, there's 5 meters of snow there. So we're on a raised back on a ridge probing until we don't have to dig more than a meter of snow to put in tent frames, to put in a lineup for a drill camp to receive 2 rigs because we couldn't stop the rigs from coming. They're already en route. We couldn't delay it. It would have cost us a fortune. So in came the first 2 rigs, and that was the beginning in 2009. So as the story starts unfolding, we start drilling these silver anomalies, which was the correct thing to do for Silver Standard at the time. And ironically, it was because electrum is 2 parts gold, 1 part silver. And silver is a lot more mobile off the surface. So you have to give credit to Don McLeod's crews, the geologists who made some really great maps. But there are pieces of the puzzle everywhere because a lot of snow cover was in play. So after the 10 holes, we looked at it. It didn't look overly great because you have to keep in mind, we just finished drilling 800-meter holes of snowfields of stunning stockwork. We saw this great effort of the upper gold zone was just this great cap. And then after that, the gold copper zone was a nice stockwork. So we were chasing another low-grade deposit, but hopefully better grades was the goal. And we only had 1 hole that hit that. It was SU5, I believe, and SU7 was a bit of a dog. Then Ken says, well, go give it the best shot you can. And what I used to do is always take 2 structures and kind of go down the hinge of both of the structures to look for chutes, because I thought, here's the opportunity to see if we do get a lode system parallel to what West Zone was to the south. And sure enough, that was supposed to be SU11, but I got fogged out. So I had to choose another target at the base of a hill. And these names, now this is going to blow you away. There's about 20 names on the Bruce Jack Lake area because it's had 50 years of exploration. It had 5 major companies come through. There was 1,000 drill holes into it. There was over 100,000 meters of drilling. So you could imagine the amount of pieces of the puzzle that are laying around me, kind of swirling in my brain like a Rubik's Cube, trying to figure things out. And I'm thinking, well, I'm going to go to one spot that no one's tested. It's a snow-filled gully. So I went up and I planned to put a pad on that, but I couldn't get there. So it had to be 12 because I couldn't get there with 11 because that was the next hole. I had to put it at the base of Galena Hill. Base of Galena Hill, right behind camp, we're drilling away. And that's actually part of the system too. All of that was within the Valley King system, but we didn't know it. On surface, Don McLeod's guys had found some high-grade gold. So I was actually chasing that. And I was kind of oblivious to the fact that it was electrum, didn't really sink in. So when we actually set up on 12, I was still running both camps. I was still running the Snowfields drill program, which now had 3 drills, so I was still the bigger program. This was just straight exploration. We had Paul Baxter, great guy, great geologist. He was running the plan at Bruce Jack at the time, and we had a bunch of young geologists that came in that were all in charge of their drills. At this point, we now had 2 or 3 rigs going at Bruce Jack. And so I was back in my camp running, and I said, well, let's just drill a 300-meter hole into this gully and see what happens. Well, the 300 hole was completed. Ron was at the site at the time. He flew back to see me to the north to say, Ken, your hole is done. I don't know if you want to keep going or not. I'm not sure what your objective was, but didn't really hit much in it. It was just maybe, 3 to 5% pyrite with a little bit of stockwork. We're looking for a big stockwork. That wasn't it. So I took the flight back with Ron, landed, went to the office. I said goodbye to him. He went back to the head office and down to South America to continue his great work at Piteria. And then I walk in and start talking to Paul Baxter. I said, Paul, you know what? SU5 had some stockwork. This should be an offset to it. I don't understand. I think SU7 missed or vice versa. So we've got to explain this. Maybe there's a fault offset. So he says, well, why don't we just shut the hole down, casings in the hole, tell him put a fresh bit on and go. I said, great suggestion. Let's do that. So we did. We went up and met the geologist coming down the hill, told him, turn around, go back up the hill, keep it going, fresh bit. He goes, no problem. And that young geologist, I will not name his name because what happened to him was absolutely the worst day in his life. Because we had a rule at the camp. You had to have like 48 hours from caller to lab. So it was a really tough schedule to keep. So when you got your core, you had to absolutely log it, have it split and sent out and piled. So it was gone. So we had nothing to reference to. And they told me, no, it's basically not a great hole. So we continued the hole. And ironically, SU12 was the first hole that hit native electrum. And it was around 560 meters down, and Greg Stone was the geologist on that replaced this other geologist that spotted it. And I was there to see the end of the hole. Great, we actually found some gold. I was pretty happy. It was, ounce and a half. So mission accomplished on that. However, I went back to continue my work at Snowfields, kind of overseeing all this stuff. I come back looking at yet the next setup on other holes. I get this call from Ken McNaughton on the satellite phone at lunchtime, or at coffee break time, I think it was. And it was Ken saying, you know what, we got a problem. I said, what do you mean? He said, it's a really good problem to have. I go, okay. He says, I think the lab kind of screwed up on this one. They misdiagnosed or they mislabeled the gold for silver and silver for gold. I go, well, how bad can it be? And he goes, well, they say that we've got 17 kilos per ton gold and something like 8.5 kilos per ton silver. And I'm just listening to this thinking like, kilos, like what the hell's a kilo? 16,949 grams gold and 8,500 grams silver. And I'm sitting there listening to this thing. Are you insane? Like, no way. And he goes, yeah. They had to do a concentrate button. There's like 6 ounces in this thing. It's real. I said, not an error? I said, no, they actually poured a button on this thing. It's like a golf ball came out of that half core. I mean, you got to be kidding me. So I tell the guys, go to the core stacks, pull all the core out, get it out now. I want to see it. So I just finished off with some business with Ken McNaughton. I go walking down to the core stacks, and there the kids are holding this thing up, and you could see it from 20 feet away, the unmistakable striations of the drill bit cutting semi-massive electrum. This kid who put on his logs polished pyrite, he wrote polished pyrite over semi-massive electrum. And I've got that piece at home. I should have brought it. I'll have to dig that up someplace. But what a thing to have done. And he went out that night because he went to Eastern Canada to see his girlfriend. So he's happy to see her. But I guess I lit it up in town and had one too many, was feeling really rough. So when I saw him on his rotation 2 weeks later, when this news just came in, he was coming back off rotation. And he said, "Oh man, Ken, I had the worst day of my life the day after I left here." I go, no, you actually had the worst day of your life the day before. And we laughed. He goes, "Oh no, what did I do?" Well, it was a good thing. You actually sampled it. And this is where I credit the discovery to Ken McNaughton. Why? Two reasons. He insisted on coming a big diameter, HQ and NQ core. One of the reasons I think that Don didn't hit so often was because Don McLeod was because he was using small diameter. Statistically, we ran it afterwards. PQ as the big 4-inch core. It didn't do much better than NQ, which is like almost 3-inch, 2 5/8 or something. And NQ2 was just about 2-inch diameter. That 1-inch core was non-representative. It showed statistically it wasn't the best weapon to choose when you're trying to shoot an elephant. It was a 22 when you should have been using a 416 Rigby. So in this case, this was our thing. And the other aspect between Ron and Ken, they insisted that we sample everything. And part of my job in the story of the Bruce Jack saga was to go and reconcile hits that we had over 1 ounce gold when no visible gold was detected. My highest number was shocking to me, was 700 grams. That's like 3/4 of a kilo was not reported having any gold seen. And I've looked at the cut core, could not reconcile that. So it must have gone in as possibly polished pyrite or just internal in the core. So it just taught me a lesson: sample everything. If in doubt, sample it out, take it. If we didn't, I guarantee it, there's a chance that we may not have sampled that because we were after a big stock system. Many companies make that mistake. So there's the lesson to young explorationists. Sample everything. When you're in a new area, don't think about it, because to skeletonize it the first time, sample bits and pieces, go back and add sequences, gets confusing on an assay sheet. So Ken McNaughton had it right. He was the guy that knew what we were doing the best, I think, and had us directed to discovery. So at this point, we didn't believe it. We didn't believe it because we didn't even chase it. I mean, we did an offset 25 meters, and this is true. I didn't sample that. I looked at it and I thought, no, this is absolutely dead. Later we did. That was 40 grams that I didn't sample. So I made
wild.
That mistake.
Was it not visible then?
Nope.
Like what?
No, it was inside, encapsulated. So you had this 2.5-inch cylinder. Within it was an ounce of gold that was not exposed on the surface. Keep in mind, when you do the drill program, if the saw kerf, inside kerf, does not cut that rice grain size gold and expose it for you to see, you wouldn't see it. So the bigger the diameter, the better. But when it's so large, you've encapsulated it and you didn't split it to look in it like an Easter egg hunt, right? So we just looked at it as an offset, thinking, yeah, let's not take away the 17-kilo hit. Let's not even sample this thing. I think this is something like in the end, Eric Westberg came in and he says, no, what's the sampling? We did. And sure enough, it came in at being over an ounce. So it was real.
So I'm surprised, Ken, as someone that hasn't done exploration and geology and out on the field, that this is all being done visually. You know, all this money is being spent and then people are basically just looking at it without sampling it.
Oh, you want to hear a horror story? I'll give you one there. Manantial Espejo in Argentina. We picked up a project called, Manantial Espejo. It's by St. Joe's Minerals, had it. And Barrick had the property before. They instructed their guys to ignore everything in the core. Every 10 meters, take a 1 meter sample. That's all. Ignore structure. It's a vein district. So there they are looking for one thing specifically, disseminated veinlet. Okay, if they don't want to find anything else, they ignored it. LAC comes in next, they let the property go. So LAC comes in behind them. What did they do? They sample only the veins, which is fair enough. Now they're at least onto it. They get some resources. However, I'm walking by the core shack when we took it over because they let it go, and I'm looking at the Carina Union. I'm walking past it. I'm looking down at pure uncut core, and I'm seeing acanthite dripping out of it. Like, what the hell is this? So I pick it up, and it's the last three panels on the end of Carina Union, and it's in a stockwork. It's not in a vein anymore, and they just didn't want to chase stockworks because it's too narrow. Well, I sampled it, I sent it off, but I used my tickets in my chest of my a pocket of my cruiser vest that had my OEX, ongoing exploration, my rock sampling series. And Ken was very adamant about series because he knew exactly where the hole came from when he saw the series. So he sees about 3 weeks later a bunch of silver values over a kilo come up on OEX, but it says core. It's going, what the hell's up with that? It wasn't rock samples. So what'd you do? Do you sample core with your OEX sample series? I go, no. I thought, well, oh yeah, I did. I said, yeah, I did. I was going to the core shack, so hole 102, 103, and 104 had tons of acanthite through it. He goes, you're not kidding. You got like 12 over limits here on silver. That was the beginning of the interpretation that led to the rest of the discovery of Carina Union that everybody left for dead, including Pan American. They flew down to say, this is over. We're not going to sample this anymore because there's nothing to it. So I put together a brand new interpretation, and we were like 4 sections out, hitting the best intercepts visually estimating. This is where the visual estimate began in my mind, where I started doing that on associations, textures, et cetera, as oxidation. So they didn't believe it. While we're in Patagonia, just then that hole came up and Dave Lander was in the back. I'm arguing with 9 of these guys from Pan American, great guys, but they were adamant that this was going to make anything. Well, Brett Boster was the manager at the time for Pan American. Dave Lander sees this number come up. I told these guys, this is the top 5 holes in the project. We had like 350 holes, 400 holes already. And this was number 3, and it was all in visual estimates. It was probably an ounce and a half over 25 meters gold equivalent. So it was incredible. But the point I'm making is everybody left it for dead. They didn't bother just finishing off the play. It's like in hockey, we have that expression in Canada, shoot the puck in, don't admire your pass, go after the puck. This is where the work begins. It's like you drill the hole. The cheapest thing in the planet is the sample. Take the sample, finish off the play, see what's there. And this is the amazing part about doing it properly. And this is what we did. And go deep or go home. Don't just come in, drill a shallow hole and quit, because these systems are large, they're deep. So there's a couple principles at play here. Very important, like I did with that hole extending past 300, because it went to almost 600 meters and got gold all the way down it.
Fascinating.
Thank you once again to Surge Battery Metals for sponsoring this week's episode of the Northern Miner Podcast. Thank you also to Ken Konkin for part 1 of our extended interview on the story of Pretium Resources. And thank you, dear listener, for joining us once again. If you want to help out the podcast, please leave us a review in the Apple Podcast directory. Share it with your friends. And until next week, take care.